Howdy ho, everyone, and welcome aboard. This is Jeff coming to you live from Tasmania, Australia, and it's a brand new time. I see that we've got on Learn to Trade Live and Free today. That's interesting. I wasn't aware of that, but that's okay. We will do the best we can. I'm sure. Oh, I'm getting an ad. Let me get rid of that. There we go. Righto, guys, welcome aboard. It is a terrific Tuesday. That's the one we're going to use, I think, and it's wonderful that we can have you with us. I believe that I've got a little bit of news to share with you. G'day, John. How you doing, mate? Was listening to my local news service only just a few moments ago, and I was told that the Reserve Bank Deputy Governor addressed a Senate hearing committee today, and he told that Senate hearing committee that it looks like Australia has bounced straight back out of recession and will post a positive GDP figure. Now, I'm not sure when that GDP is due. Just hang on a second. We'll see what the Forex Factory can tell us. Forex Factory, where is that? There somewhere. Right, okay. What's the calendar saying? Righto. I don't think GDP figures are due anytime. Maybe next week, because it is, of course, the first week of the month. And when we've got the first week of the month in Australia, that means that we have all sorts of things going on, like retail sales, like interest rate announcements and things of that nature. So let's take a look and see what next week actually has in store for us. And if it is the GDP numbers, monetary policy statements. I don't see anything to do with GDP. That's interesting. So I'm not too sure what to think of that, to be fair. I noticed that we do have the US dollar, the daylight saving in the US over the weekend. That's going to be a little bit tricky because, hello, Ash.
Are you in early again?
No, I was told to start at 6:50 my time. That's what it says on YouTube. So that's what I did.
Dear me.
They throw up a curly one every now and then, don't they?
Well, yeah, because I messaged yesterday.
Yeah, I think they've just got the 5 minutes a little bit out of kilter, that's all.
5 minutes? Well, so you started at 6:30?
No, I started at, 6:50 my time, which is
6:50. 5 minutes ago.
3:50, yeah, 3 minutes ago.
Okay, all right, no problem.
Hi, Joe.
All right.
Hi, Lewis. Hi, Ash.
Hi.
I was just telling the guys, and I don't know, I can't find out when the Australian GDP figures are due for release. It's certainly not next week. And, well, I don't think it's this week. I didn't have a look at this week. But I just heard the Reserve Bank, the Reserve Bank Deputy Governor has told a Senate committee that Australia is out of recession.
Oh, right.
So the GDP figure, he must know that figure. And he did make that clear to the Senate committee. I haven't seen any movement in the Aussie dollar to reflect that. This is only like an hour ago.
Okay.
Or something like that. And I cannot see where that's due for release.
No, what, the GDP?
Hmm.
It looks like it's not this week. Interestingly, we do have the United States GDP this week. Yeah, we do have the United States GDP this week, which could be an interesting number. July, October.
Anyway, I was busily looking around for a little sneaky Aussie long trade, but I haven't been able to find anything that suits me there either.
Yeah, I'm with you. I've got I guess the possibility of a long as we open up this morning is there, but I would really like a little. I mean, I'm not really talking about the Aussie, but I'd like a little bit lower in equities and Ethereum. Actually, I'm looking to go long in both the FTSE and Ethereum, and I'd like a little bit short, a little bit lower with both those before I pull the trigger. But the US elections really is throwing up a massive curveball at the minute, and I don't know whether we're going to get the opportunity that we're really after. Oh, you've had a very good haircut there, mate.
But I slipped under the mower this morning. Yeah, it was painful.
Yeah.
Occupational hazard. I've got cold ears, I can tell you.
Yeah, well, you're doing it at the wrong time of the year.
Well, it's actually spring here. It's supposed to be warm.
Oh, okay.
It's I think it's only about 7 or 8 degrees at the moment. It's a bit chilly.
It's very chilly here, I have to say.
So I'll have a beanie on as soon as I'm finished the show.
Yeah, well,
pound trade. I think we better set it up, should we?
Let's do it. Yeah.
Before too much longer, and we'll come back and talk about whether the Aussie is going to rally on the back of that. It is news. It's not a rumor. It is news. I heard it with my own 2 ears. So
okay,
we'll see how that goes. Righto. I think we've got to amend the entry for the short. The entry for the long should be okay with 4 minutes to go before this opening. So we'll change the entry on the sell to 1.3011. Now I do notice there's a few fresh faces in the room today, so I'll briefly explain to you what this is all about. Now 11 to 34 is 23 pips, so we'll be using 11 pips as our TP1, which is interesting because we'll be going bang on 1.3000 as TP1. 1.3000, and TP2 will be 46 pips, which will be 35 below there, which will be 1.2965. That will be TP2. Why have I got 2 TP1s? I'll fix that. 2965. There we go. So TP1 number 2 can disappear. There we go. All right, so there are your parameters for today's breakout trade, unless, of course, we break to the high side or downside before that. That doesn't look possibility at this point in time anyway. Okay, so for those of you who are joining us for the first time, firstly, welcome. It's good to have you on board. Let's hope you hang around for a bit, and we can show you exactly how we do things around here. Generally, with the pound US dollar breakout trade, we're looking for a breakout of the previous 3 bars before London session. So in this, on an hourly chart. In this case, we're using this bar, and this bar, because they are indeed the last 3 bars before London Open. And we take the high of that range, we take the low of that range, and we seek to trade a breakout of either one, long or short. Now, if we are triggered into the long, we cancel the short, and vice versa. If we're triggered into the short, we cancel the long. Now, we do muck around a little bit with these management rules because we're trying to get this to be consistently profitable. A little bit difficult to say for sure that we're going to get it every time. In fact, it's impossible to say that with anything, of course. So we've just got to make sure our management is up to scratch. So here's how we're managing it at the moment. If we get taken into the buy, as I said, we use the difference between our entry and our stop loss as our guide for our take profits. 45 to 31 is 14 pips. So we're going to use half of that as our first take profit level. So we add 7 to 1.3045. We come up with 1.3052. Because I better place these trades. I haven't done so. This is still in beta test mode, by the way. So do not put anything meaningful in terms of dollars onto this. You can have a little flitter with micro lots if you want, but this is definitely not something that we're endorsing as a trading What's this say? Buy. Better go sell first, do you think? Because we're close to there. We're trying to, as I say, knock it into shape so that we can then state that this is a proven strategy. We'll get there. Righto, so the sell order is short at 1.3011. And the stop loss is 1.3034. Okay, so that order is placed. And now we go to the buy order and place that as well. So it's a buy stop at 1.3045. And the stop loss is at 1.3031. And that will do. Right, so just returning to the management of this, as soon as we get a first take profit, we move our stop loss, the equivalent of the take profit, which if we're going short would be 23 pips here, as you can see. That 23 pips, we go half of our 23 pips, which rounded down to 11. So that's the difference between entry and TP1 is 11 pips. What we would then do is move our stop loss 11 pips from entry, so above entry, meaning that, of course, if we do get triggered into the short, our stop loss is here at the moment, we would move it down to 11 pips from entry, which of course is the same distance as we took at TP1, meaning that, take half off the table, half of your stake off the table at that point, meaning that you would be in a free trade situation at that time. So TP2 is actually double the difference between the entry and the stop loss. So our risk is doubled there. 23 pips becomes 46. 46 off 1.3011 is, of course, 1.2965. So that's how we work out our first take profit and second take profit. As I said, when we hit TP1, we take half off the table, move our stop loss, that amount of pips from entry. When we hit TP2, we're leaving that optional at the moment. You could move your stops to entry and do nothing else. You could take another half of your position off at that level and move your stops to entry. That's non-negotiable. Move your stops to entry at that time. Or you could simply go into a trail situation, which is what I do once I hit TP2. I just trail on an hourly chart and see how far that can take us. That, after all, is what we're looking to do. We're trading a breakout strategy, so we're hoping that it breaks out. Do I think that we've got a strong chance of breaking out of here today? No, I do not. But that doesn't mean I don't trade it. That is not the strategy. The strategy is to trade the breakout. We don't know if it's going to break out or not, but I've got a very strong suspicion that these pivots being as close together as they are mean that pound US dollar ain't going to move too far today. We have got a little bit of strength in the dollar index today, I noted earlier. That may mean something. It may not. It has been in a very tight range, as we know, for some time, and falling. Could be a little bit of a relief rally, who knows? But anyway, I'm choosing to stay away from things that have got US dollar in them. I don't wish to trade them. The breakout is okay, but I don't wish to trade them certainly on a small time frame, because I think there's going to be a lot of stop doing that. There's going to be a lot of noise about the place this week as the volatility around whatever's said by whom and whatever polls they're running in the States around this election gather momentum, as they will towards the end of the week. In particular, one would think. And I noticed that Trumpy's had a victory overnight with his nominee for the court, whatever what's that position? I can't remember what it is even. That's now being through justice something or other.
Oh, yeah. He was after that, wasn't he?
Yep. Well, he's got that. That's happened. and I don't know what else is going on over there at the moment. And I'm really not that interested from a trading point of view, because I think there is going to be such noise about this week that I just don't really want to be a part of it. So I'm steering away from the dollar, somewhat away from the pound, the euro as well. Not as dramatic, but I think the minors have got a lot more appeal for me than do the majors. So that's kind of where I'm at, mate. What about yourself?
Well, do you know what? I mean, I think that it's an interesting one. There's a potential trade in the FTSE 100 to the upside, but it could be a little bit dangerous. And really, I'll show you what I'm looking for. I'm looking for longs in the FTSE, first and foremost. I'd really like it down here, maybe even lower. I'd really like it at the low end here before I do go long. I mean, if we were just trading on the day, this does look like it's gonna get to that upper line on the FTSE. Is it worth taking a trade here? Let's just figure out what this would be. 40, 45, 23. There's a potential 2-to-1 here. Let me just bring this into another. There is a potential 2-to-1 on offer. I don't think it's going to go too much further, but I think we are probably in for a little bit of upside today. I think that I think the markets are generally going to just calm down a shade today, but we do have a few issues now. Really, the problem is we are fighting the trend to the downside, and we'll be trading sort of something very, very short term, and there may just not be enough momentum to get us there. It does look like a 2-to-1, and I wouldn't be taking any profit. It would literally just be playing this point here at 57.88 right up to that pivot, and I do think that's going to happen. My issue is not whether I think it's going to happen, is whether the stops might get taken out before it starts to jettison up. But it does look okay. There's a tiny little trend line here, which does make this low a shade problematic as well. So you'd have to get under there. Now, if you were to get under this point, it just starts to negate the risk to reward ratio because we're fighting the trend to the downside. But I think the FTSE probably pops up a little bit today. This would be the short area, in actual fact, and you know, if you are fortunate enough to get a long, then it would probably be a long to go short, if anything, because I think the market has got a little bit further to come down. But this pivot looks like a target. This is the entry here, but the stops down here, you know, which is probably where they'd need to be, I think, to be safe, just doesn't make the risk to reward ratio good enough because we're fighting the trend. So I probably won't play that. Now, I don't really want to play this as a downside, because what I do want a long in the FTSE, and I want a long really that the area that I'm after, as I say, is down the bottom, it's a bit further down. Now, I think that there's just a bit more flushing out to do, so that's why I'm looking for some further upside with some further downside with the FTSE. But this area down here at 56.50 that I've kind of mentioned before, that to me would be a sweet spot. Now I'll just put up a fib as well and just see whether we've got some confluence at that particular point. It does look like we do, you see, just down here, the fib from the lowest point to the highest point, bringing us down to a 50% retracement of the move to the upside, would mean that this 56.70 area, so between 56.70 and 56.50 is still on. Now, because I see that down there, the markets and these levels may, you know, I think this does act as a bit of a magnet and pulls us down, which makes the trade to the upside just that little bit more tricky and a bit more dangerous. So I probably won't play it. The downside, sorry, the upside movement, sorry, the upside area is the weekly pivot, and at that point, I think we may well see some downside from there. So it looks like 58.38 is the sweet spot for a short. It's just whether we take it or not. But because my overall and my overarching strategy is really about going long. You know, I do want the long. I think there's enough volatility to continue to drag us down. As I said in my Sunday preview analysis, it was the Nasdaq that was the one that I liked the most for the short, and I would stand by that. Missed the opportunity yesterday. I was out all day yesterday, but there was an opportunity yesterday to trade the Nasdaq short, but it didn't quite get to the weekly pivot, so I'm not quite sure. I don't know whether I would have got into that anyway. Maybe I wouldn't have been triggered in. But the short on the Nasdaq looks like it's around about that daily pivot. Now let's pull up some levels here as well. That's going to be quite late in the day, isn't it? That's even into tomorrow. If that's gonna coincide with the trend line, this looks like a false breakout here. If that's going to coincide with the trend line, it's not going to get to the day. It's the daily pivot is just a little bit shallow. So there's no confluence there. Let's have a look if there's any confluence on a fib as well. So the overall move yesterday doesn't look like that's going to give us any confluence on the fib. The fib is going to stop. Hold on a minute, what's just happened there? Oh, I just had a pivot and it's disappeared. Did that change in front of my eyes? Not sure what happened there. Okay. Well, 68% retracement doesn't give us that, so that's no good. So knowing where the Nasdaq is problematic. Let's have a look at oil as well. XTI was a missed opportunity a few days ago, but let's see if that's got any chance of coming back. Possibly. Possibly the whole flush out might just continue the move lower here, and that might be what's now happening with the FTSE. So I think the FTSE's got further to run, but I'm not. This feels like no man's land to me, mate. I've got to be honest. I feel like I'm kind of in a bit of a trap, and also the election feels like a bit of a trap. I'd be much more comfortable, and it's boring. But it might just be one of those things. You know, I don't want to have to break everybody this news, but there is a high possibility that I don't take a trade until the election, and that's not until next Tuesday. So I've got a week to wait. But it's unlikely, but it's a possibility. You know, there probably will be something that I can grab onto, but I'd be much more comfortable if we were looking at the price point down here at the 56.50 down here, and it's somewhere between 56.50 and 56.70. So it's in this kind of range here. But I'd be much more comfortable if we were down here, say Monday. And that way I could probably trade it to the upside, you know, going into the election. But there's a chance that I get down here by tomorrow. You know, the market gets down here by tomorrow or even Thursday. And then I will take the trade. You know, I'm not going to kind of like wait for the election, because I think by the time the election's done, we're probably done. I think that the GDP release is interesting. You know, you did touch on Australian GDP, but look at US GDP. The advanced GDP is estimated at 32%. So obviously coming from a very, very low mark, but you know, this is a relatively speaking, you know, almost well, relatively speaking, it's 100% bounce back, but of course it's not, because you know, 31% down. Let's say GDP, just to make the maths really easy, and I'm sure you guys all understand this, but 32 down and 32 up, which is pretty much what we got here. You know, we've got 32% predicted to go up, and we had near enough 32 down from last time. So if you were to have 100, and we'll do it on really easy figures here, 100. So if you had a GDP of 100, and that came down 30%, then you're down to 70. But if you add 30% to 70, then you actually end up with 91. Am I right on that, Jeff?
You add 30% to 70, did you say?
Yeah.
That'll do.
Yeah,
Close enough for
91.
me.
So yeah, so you go from 100 GDP, but actually if you come down 30%, you go down to 70. But if you go up 30% of 70, 30% of 70 is 21. So you get up to 91. So the GDP doesn't actually recover fully. So even though it looks like a complete bounce back, it's not a complete bounce back, and it would have to get to that 32. To give that complete bounce back, as to give that relative, what would look like a relative bounce back. And it may not get there. I mean, it's that's advanced GDP. The numbers haven't been too bad. I was having a discussion last night with a friend of mine about the US, and we were both in agreement that the US stock market looks overvalued here. And I'm going to bring you something in a little while and show you what we were looking at. But the US stock market looks overvalued, and if the US stock market is gives us a little bit of bounce back, then it's still going to look overvalued. So I think the market does come down, but the numbers, generally speaking, don't look too bad. So if it does come down and it comes down to an attractive level, then I'd be a buyer of certainly the S&P. The Nasdaq I'm a bit cautious of. With a Biden win, I've got to say, I think a Biden win won't necessarily be good for the Nasdaq. So if the Nasdaq came down to a decent level, then we can have a look at it. But that decent level is quite a bit lower than where we are now. It looks like another 10% drop to the downside before I'd be really comfortable trading the Nasdaq to the upside. I think there's some problems coming. But let me just bring you something here and see if I can find it. Where are you? I thought I saved this yesterday. Maybe I didn't.
I'm suddenly starting to feel a little bit of a ripple suggesting that Biden is not across the line as many people think he is. It's starting. I think the Trump propaganda train is in full swing right now.
Yeah. Well, I think you're right, mate. I mean, so, I was talking. We were talking about the Trump scenario yesterday. And he's of complete belief that that Trump is going to win. He's of no doubt at all that Trump's going to win. I mean, my position is that I think Biden's going to win, but I won't be surprised if Trump does.
I think before COVID-19, I couldn't see Trump losing, but COVID-19's knocked him around a heck of a lot.
Yes, it has. Yeah, it has. It might have knocked the stuffing right out of him.
But yeah, who knows? I mean, it's a waste of time me even speculating. It's a toss of a coin for me.
That's the problem, isn't it? And it does become a bit of a toss of a coin, and speculating and trying to take a position on that is tricky, if not impossible. And this is one of the reasons I'm apart from if I get the absolute price that I want, I'm considering just thinking, maybe this market is just not a good market to trade. And we have to recognize that as traders. Sometimes we're walking into... That's where you're at. Yeah. I mean, so just sometimes we're walking into a bit of a lion's den, aren't we? And we're just like, do we really want to get to a position where we are putting on trades with a huge amount of doubt at the back of our mind? And we're just not able to relax about those positions. I really want to be confident when I go into a trade. I was confident with oil. I didn't get the price I wanted, but I was confident oil was going to go down. So either way, I would have been okay holding it. But I have to say, at this particular stage, at this particular price, I'm just not confident which way it's going to go. If the FTSE was to come down to that 56.50 level, then I'd be comfortable. Not confident, but I'd be comfortable there. That we're going to get some kind of bounce, and I'd be after a proper pickup. I think the FTSE is obviously kind of all mixed up with Brexit. And we're likely to get a resolution with that, which means it's mixed up with the movement in the pound as well. It's mixed up with the movement of the price in the pound. So I think that the UK stock market starts to look like really good value, whereas, and this is the biggest thing about all this. just about every other market, globally, has not recovered to its previous high. The FTSE's only not even halfway home. I think we did this yesterday, didn't we? The FTSE's not even halfway home. The S&P, obviously, it broke its all-time high, and it's kind of like, meandering up at that level. Does that look overvalued? It looks overvalued, but then there are certain numbers that suggest that it is also overvalued. And if people don't understand how to calculate if a market is overvalued, look at now this is a it really is it's a difficult thing to calculate, and it takes a lot of work, but you can certainly start to look at and start to Google Shiller and CAPE. And what this does is it takes the earnings of the companies within the indices, and because earnings per share is a really bad metric, or what's the word, misleading metric if you take it in isolation. It's earnings per share over 10 years. And those and then there is inflation adjusted as well. So inflation starts to come into that. So if inflation if we were looking at 2020, and inflation was at I don't know, 7, then you'd have to go and calculate how much higher is inflation from 2010 to 2020, and if it's up 7%, then the inflation actually starts to come, it's part of the value, part of the calculation of the valuation of a company. Now, I'm probably not explaining this very, very well, but it's a quite complicated and convoluted way of getting a true value of a stock. But what that then happen, what will eventually happen is that you take all the stocks within the indice, and you can start to see that the S&P is overvalued. And you can take my word for it, or you can go and research this in further detail. But it's really down to the fact that the earnings and the inflation over the course of the last 10 years do not match the price of the equities. So if we value an equity, if we think about an equity, and you can think about this as a company, if any company is really valued on its earnings, or as one of the metrics we value it on earnings, then we can do that with the whole market by taking every single share within that index and doing it on the earnings. Now that does mean that brings us to the assumption that the S&P is overvalued, and the chart kind of tells you that. We don't need we don't really need to pull up a chart and have to make just a blind assumption on it. We can see that the value of the S&P is above, just about actually, but only just above its previous highs before the pandemic, before the coronavirus pandemic. But then if you go and calculate the earnings per share inflation adjusted over the last 10 years, what you will get is a number which is way below what it should be here. So and the pandemic is still wreaking havoc. So that GDP number is going to be really interesting later on, to see what the growth is. And eventually this is going to topple over, the S&P and the NASDAQ will topple over, and the Dow, because the earnings don't match the valuations that have been accrued here, which means that what eventually happens is that investors say, well, why am I holding S&P stocks if the earnings per share are not as good, relatively speaking, to value as FTSE 100 stocks? So the FTSE 100, you can see, is nowhere near its all-time high. And it has been, there's no doubt that Brexit has hampered this, but the Shiller ratio and the CAPE on this one is much more attractive. So the earnings per share on this one kind of is probably just about in the right region, or the earnings per share are probably just about above the current value of the FTSE. So actually, the FTSE starts to become a lot more attractive at this particular stage than the S&P, the Dow, and the Nasdaq. So I like the FTSE, and if I'm going to go long in an indice, it's probably going to be the FTSE. Brexit aside, it's probably going to be the FTSE. But you can go right across the board and just have a look at all of them. This is the Australian index, still nowhere near its highs. The CAPE ratio on this is also pretty good as well. I don't think it's anywhere near the kind of the levels that it is on the US market. So taking the earnings per share inflation adjusted, actually you'd get a return on this one at this particular level. So that looks pretty good to me. China stocks 50. So the Hang Seng. Now this. Oh no, this might not be the Hang Seng actually.
Mate, I'm just moving my stops to entry on the pound. We've missed
good stuff.
By
good
less
stuff.
than well, I haven't taken any profit, but I'm just moving stops to entry because we just missed TP1 by less than a pip.
Oh,
and that's my rule. So
yeah. Ugly.
We'll see how we go. We're still in.
Yeah. This isn't the Hang Seng. This is the Hang Seng. Hang Seng nowhere near it. China's a bit different, because if we look at China, yes, we can see that it is, beyond its all-time high. But China is the one area and the one country which has got genuine growth. So this is where the chart starts to become more misleading. So China's a really good one to bring up here. If we look at China and we look at the S&P, we would say that they both look overvalued because they are both, beyond their all-time high and that they are near the highs. However, when you look at the earnings per share inflation adjusted on the S&P and you look at the earnings per share inflation adjusted on China, they give a very different picture, and it means that China, if anything, has got probably further to run to the upside. It doesn't fundamentally it doesn't have the same problems. So China would be one exception to the rule that it's only the states that are all-time highs. This is the IBEX 30. This is the Spanish, nowhere near. This one really has been an underperformer so far. Eurostoxx 50 is probably around about halfway home. The CAC again, misleading. Looks cheap here, but actually the CAC earnings per share inflation adjusted actually is a bit high. So I won't be touching those guys. Germany, I would always look to buy German stocks because I just think that they are a pretty solid region. And well worth having in the portfolio. That could do with coming down another maybe 5 or 6% to the downside, and I'd be interested in buying something there. Japan again, still not at the all-time highs. They're close, but not quite there yet. We know about the Nasdaq and we know about the Dow as well because they both fall into it. So certainly with the ones that we have on MT4, but you could go around the globe and have a look around. It looks to me that the US is a bit overcooked here, and if you take in some of those numbers and the fundamentals, it's suggesting it definitely is overcooked. So that does put us in a bit of a hiatus anyway, but that's forming my opinion anyway. That I want a FTSE long, but I'm not keen here, and I will wait on it. But let me just show you one other thing as well.
Right, bud.
Oh, sorry, mate. You want to go around
G'day
the ground?
To everybody in the room, by the way. I haven't said g'day to everybody. Swee, Lewis, Joe, I said g'day to you. Paresh, Shukri, who's got, what did he say before? Hurricane Trump. We know about Hurricane Trump. Alan, Supreme Court, thank you very much for that. Sino, good question. Ash is kind of covering that. Lewis, g'day. Yeah, look, I'm of that opinion, Lewis. I'm not that keen to trade this week, I've got to say. And John, I think I said good to you as well.
Look at this with the VIX. Now, it's not giving me any intermediate time frames with the mix, but the VIX. But the look at the VIX. The VIX is picking up and certainly starting to look like a reversal pattern down here. So another reason or another suggestion that we're going to get some further volatility here. Looks like an inverted head and shoulders here, and it looks like the VIX is probably going to go that little bit higher. this is probably election volatility rather than anything else. And I think when the election is done, I think the buying starts again. But the VIX looks like it's got a little bit further to run as well. So a lot of things are suggesting that any buying opportunity is just a shade early here if we're going to take them. I'm not comfortable with shorting it because, as I say, I think the FTSE has probably got some room to travel to the upside. So I'm not comfortable shorting it. But with the US market, I'm a bit more comfortable. I think the VIX is suggesting that there is going to be some downside. The Shiller and the Cape ratio are suggesting some downside, and now the chart is suggesting downside. Weekly chart hasn't really fully established a lower low yet, but it's coming down from its highs. The daily is starting to look like a downtrend. With the S&P. So will there be another opportunity to get on board with this? I don't know, but the S&P and as I said, the Nasdaq's the one that I'd really like. I'd like to short the Nasdaq. I'd still like to short some oil, but otherwise I'm waiting for a long in the FTSE, and that might be that I wait all week, and I'm happy with that. Completely comfortable. And to mirror what you said, hello to the guys as well. Thanks for joining us.
Mate, is it the only game in town as far as the markets are concerned?
The election. I don't think so. I think if there was all of a sudden an announcement that the stimulus was going to go through, then I wonder whether the markets would actually turn around and decide to go in the opposite direction. So no, I don't think it is. I think that they've been very quiet on the stimulus package, and I think the Democrats are playing it very cleverly. It's probably not the fairest thing they can do. They are being quite unfair because the US economy and some of those really desperate people do need the stimulus package to come in. But I think that if there was stimulus, that probably would be the next game in town. I think that as for the coronavirus, unless it was something huge announced, I think that the election will probably manage to, for want of a better word, trump that for right now.
Well, in US terms, I've got no idea what could be considered big news in COVID-19 because they just keep producing numbers that are unbelievable. Yet,
I'm wondering. I wonder whether it's on the other side of the coin. There's Oxford University said that there was a chance that they could get the vaccine out by Christmas.
Donald had it out by Easter, so we might.
He had it out by Easter.
We might as well go to the next religious ceremony.
Yeah. Do you know what though? No, I don't know if this
is Easter this year, mind you, not
Easter
next
this year. I know he was being incredibly confident about it. But do you know?
No, he's being incredibly naive about it. Is what he was.
Yes, probably true. The interesting thing, I mean, I don't know if it's the same for everywhere in the world, and you read conflicting views about, you can read whatever you want about whether you should be positive or negative right now. But one thing that does seem to come up quite a lot is that the strain of COVID doesn't seem to be affecting people anywhere near as badly as it did. I mean, it looks like we're going to get a lot more cases for the winter, but it doesn't seem to be any more any stronger than it was. In fact, it seems a bit weaker than it was prior to this, to the first wave in February, March kind of time. Now, I don't know if that's the same worldwide, but over in this country, it does seem to be a little bit less lethal. There's people actually sitting up there was a report from the BBC saying that, when COVID first happened, everybody bar one person was on a ventilator because they needed aid breathing. Now, only 1 in 5 people are on ventilators, and the rest of people are sitting up, and they're quite alert and able to handle it. So,
I guess they've probably got increased awareness and methods of treating it as well.
Yeah, so I think you're right. Yes, I think you're absolutely right. But I suppose that's my point, is that regardless of whether we get the vaccine, the medicine already seems to have taken a bit of a jump, and the way that they're actually approaching they're approaching the treatment. So that may help things out a little bit. I don't know. I mean, we're certainly a little bit away from anything really positive on this stuff, and it does look like we're looking at 2021. But I'm still quite keen to be positioning for that particular time frame.
Yeah, look, I think the world's starting to come to grips with the fact, well, not the fact, it's not a fact yet, but the idea that this is now endemic rather than pandemic, and
Yeah.
we're just going to have to live with it.
Yeah,
Like
I think you're right, mate.
Like everything else. But the vaccine obviously is part of that as well. I get the flu shot now that I'm as old as I am. I get the flu shot every year. Well, no, sorry. This year was the first year. But, you know, I resisted that because I'm a contrarian. And like I always say, I don't subscribe to conspiracy theories, but I listen to everything they say. So I was of the opinion that getting vaccinated or getting the flu vaccine was tantamount to saying, all right, you might as well kill me now. You've just given me something that I don't want or need, and you've now got control of me. You put a little pill inside me or something. You're going to track me around the world. Well, they do that now, of course. Everything you spend and everything everywhere you visit, every wine bar and strip club you're in, they know you're there.
How dare they?
Jeez, it's been a while since I went in one of those. Anyway, it is what it is. I think now it's probably a responsible thing to do for me, for my family's sake, if not my own, that I should have a flu vaccine every year. And although I still believe it's like 12 months behind, I guess it relieves some people's minds anyway.
Oh, Lewis saying there's some negative news on the vaccine in Asia. Interesting. I guess it's going to go.
And I don't know the theory on the S&P, do you? The election years theory?
Well, only that. I mean, the theory that's going around, unless Lewis means this, is that if the S&P is higher, then the incumbent tends to win. I don't know if that's what you're talking about, Lewis, or the actual moves of the S&P.
I think there was a trade involved, wasn't there?
There's a trade involved. Okay.
If this happens, that happens, or leading up to the election, the day before the election, isn't there always a rally or something the day before?
You're quite. Do you know what? And Julian's really good at this stuff, isn't he? He's really good at actually just finding the detailed day ones. You know, where he'll sort of say, and I thought of the one yesterday. I think we were off the game yesterday, mate. I mean, I was out yesterday, obviously, so it was a bit tricky for me. I was only in for very short period, but then I had to go out. But actually, we should have done a seasonal movement on the clocks changing.
Ah, okay. Yep.
Yeah.
I know what it does for me. It throws me into absolute confusion.
Yeah, but I'd like to know what the maybe we'll have a look at that.
Shukri's got something up his sleeve for tonight.
Okay. All right. All right. Look forward to that. I'm looking at Ethereum coming back a bit, Shukri. I want to buy it. I'll tell you my price to buy Ethereum, and the price for Ethereum is. I want 365. I want 365 on Ethereum. Is it going to get me in there, or do I have to get in now? I shouldn't do. Can you bring it down a bit for me, Shukri? Sell some of your Ethereum just to bring push the price back a bit, because I'm desperate for some Ethereum. I have to say Cardano, which I do hold, is flat as you like. So there's the shine has been taken off some of these moves, and that PayPal announcement doesn't seem to have made much of a dent.
Oh, did we discover whether indeed Amazon, Facebook, and what was the other one are reporting this week? Is it this week they're reporting?
Oh no, I haven't looked at that, mate. I will look at that. I'm putting in orders for Bitcoin during Hurricane Trump. Looking for volatility. Okay, fantastic. Well, maybe I'll do the same thing then. I need to. I haven't put an order in Ethereum yet, but I will be looking for some an entry in that. So I'm looking. This is the thing. I've got price points that I want to trade at, but until the thing comes back, this just looks like I'm walking through a minefield. Tech giants reporting on the 29th. Crystal's telling us.
There you go. So Thursday.
Okay. Yeah. So that could create some volatility, and maybe that gives us You're looking at 375 for Ethereum. 375. Okay, so it's a similar region to me actually. I'm at 365. Anyway, mate, we haven't gone around the grounds. I don't know whether we need to do
We have
that.
not.
Or...
Well, there's no rush because I'm not in any mood to trade, as I said.
Yeah.
Certainly not the majors, but I will share with you a few things that I am looking at, and I can also share with you the fact that we are now out of the pound trade. Well, I am out of the pound trade, and I'll show you why very, very shortly. Then I'll take you through two positions that I have put into the market. So here's what happened, guys.
And if you get a chance to bring up a dollar index as well, that'd be great.
Sure. Here's what happened. We got triggered below this bar, which was, of course, our entry bar, and we got to 1.30008. So 0.8 of 1 pip from our take profit area. That's not counting spreads, of course. So whenever that happens, I move my stops to entry instantly that I see that. And that's exactly what I did. And I called that. And now you can see what's happened. Now, Shukri is just sitting on the edge of his seat. He's just waiting now because his theory on slingshot levels is that if they aren't crushed the first time and we get a nice retracement, so we're probably looking for something back here somewhere. Not just yet because he doesn't like to trade the first hour. I don't like to trade the first 30-minute candle of London session. Shukri's extended that into the first hour of London session. So he won't be doing anything just yet, but I think if he sees a nice little pullback to maybe the pivots or maybe even the trend line, then he'll be looking bang into it. So yes, after 5 p.m. Singapore. So that's what will be going on there. I'm more than okay with that because, believe it or not, he's now done it 11 times and 11 of them have won. Interesting, to say the least. We may have to include that at some stage in the strategy. We'll continue to monitor what Shukri's doing, and if it continues at 100%, obviously we have to do something about that. It won't. And he knows that, and I know that, and everybody knows that. 100% is impossible. But 11 from 11 is not too bad. It's a good start. Let me put it that way. All right, now, so we're out of the pound trade and waiting to see if Shukri's setup comes as a nice retracement, and he'll place exactly the same order and see if that can produce a result the second time round. Now, I did say earlier, Kiwi CAD does keep going. Interesting. I'll get to that in a minute, Crystal. What I did want to show you guys is on the Aussie pairs. Now, I did say earlier, those of you who weren't in the show may well have missed this. The Reserve Bank of Australia Deputy Governor addressed a Australian Senate committee today, in fact, only probably 2 hours ago now. At that meeting, and I don't know that this has been reported anywhere, but I'm reporting it for you, the Reserve Bank Deputy Governor did say that it looks very much like the recession that Australia has had, like obviously because we got 2 quarters, the March and June quarters were negative GDP. He stated that it looks like the September quarter will be positive GDP, which means Australia comes out of recession. Haven't seen anything in the markets to suggest that that has caused any ripples anywhere. Maybe it just hasn't been reported, but I can tell you for a fact it wasn't there. I can tell you it has been reported widely this afternoon in news coverages in Australia, local news coverages, that was indeed the case. Whether that produces a rally in the Aussie is anybody's guess, but I would suggest it certainly won't hurt its cause. So I'm looking for a potential entry here, and I was biased along the Aussie in the first place. So I'm looking for a potential entry. I'm not keen to trade against the dollar, as I have stated, but things like Euro Aussie, which I am keen to trade short, won't hurt. That order's old. Sorry, I've got to get that out of there. Just got to find a way, guys. Just got to find a way. And there's little hints all over the place that this is possible. I'd like to see that close down there and then come back and retest that area to start with. That would be a good one. Or better still, get above this line, back underneath it and retest it, the confluence area, and then away we go. Or back inside the range, of course, that we've been tracking for some time. When I say sometime, I actually mean sometime. Back to June, this range has been very, very evident, and we did suggest that this was a potential area to look for a short, and that has turned out to be the case. That is very much on a strategy basis, but we're now in a position where if you didn't take that and you didn't profit from it, or you're still in it, I think maybe some people may still be in it. I don't know. I'm not. I would love to see that little bit of, you can see where the weekly pivot is there and that intraday trade line. That now comes into sharp focus. And that's the line that I pointed out. I'd love to see this get up to here, then come back underneath it and retest it. I think that'd be a really good opportunity to trade this short. Whether that news is inconsequential to the market or whether it just hasn't leaked through or not is another story. But I've got to be biased on the back of my original bias, and now that news, I've got to be biased along the Aussie short term. Now, it is also the case that in the same breath, the Reserve Bank Deputy Governor did state that it was likely there would be more. He didn't go into it. He didn't stress anything. He said it is likely that we will be looking, as previously stated, in my analysis of the minutes of the RBA meeting from last month, and I absolutely thought that there was a misread by the market there. It appears that's not the case, and the market is definitely looking for a reduction in Aussie interest rates next Tuesday from 25 basis points down to 10. I'm still doubtful. I'm really still doubtful, and it'll be interesting to see if that news has any effect on what the RBA is actually thinking in terms of reducing the interest rate. I'm really skeptical on that, but it's difficult if that's out there in the marketplace, and it is out there in the marketplace, and that's why we've seen the Aussie a little bit tepid, one would have to say, because of that reason. And I'm still looking for that turnaround. It hasn't been disastrous for the Aussie, and we have had a bounce off a support level. This is Aussie US dollar. So look, I still think it's there, but I'm not going to trade against the US dollar. As I said, I want to find something else. So I'm still an Aussie bull. I've just got to find the way in. Euro Aussie is definitely high on my agenda. Aussie Kiwi is also. I love to see bars like that. That gives me a great confidence. I had a look at this earlier and I thought, wow, that's got to be an incredible trend line. Looking at all these highs up here, all these spikes. Yet when I went to draw it, I couldn't find anything that suited me much, apart from that one, which has got 1, 2, 3, 4, 5 tests. You would have thought there'd be 157 through here, but it just wasn't the case. Interesting though, if I do draw that trade line in from probably there, what do we see? No, we can't use that. Yeah, it's really awkward. I would have thought it'd been an awesome trade line. That's probably the best of them, right? which shows you false break, which failed, if you like, if there's such a thing. And now we've just gone into that consolidation pattern, but a retest of that area right now at a confluence area daily pivot is really interesting. I'm almost thinking, in fact, I am thinking that there may well be an entry for us here. I want to see how that candle closes. And if it closes as it is, then I will trade this long. Got to take profit here, sadly. And then there's 1-to-1 to the weekly pivot. But let's have a look at that. We've got, 10 minutes to go in that bar. And I'll come back and have a look at that. That's Aussie Kiwi. Aussie CAD. Now, Aussie CAD, I was keen on this happening. What chart? This chart. I think I mentioned this yesterday, or was it another chart? I can't remember. It's very, very similar anyway to another chart I was talking about. And what I was looking at, if I use my pen here, was the potential for this to be a left shoulder, head, right shoulder. And I really was keen on picking up a long at this point. The interesting part is that may be the right shoulder there. And if that's the case, then we've already had a neckline break, but we haven't had the retest. So I'm still keen on this coming short to get long. I actually think it was Kiwi CAD that I was looking at, wasn't it? Or was it Kiwi Yen? Maybe Kiwi Yen. I think Kiwi, I'll have a look at that in a minute. But this is a very, very similar chart. So I'd love to see this get down to here and start looking for buys in that particular area. And I think we can, get up to here without too much trouble, certainly around the monthly pivot mark. But I'm not keen to go long just yet until we at least get the retracement back to here. So I'll be waiting on that one. I kind of got to the point this afternoon where I was going, wow, that news is interesting. How do I find a way into the Aussie long? But all of them that I'm looking at require a retracement before I get long. So that news is going to hit the market well before I get a setup, I think. We'll see. Maybe it doesn't mean anything to the market. Maybe I'm just way ahead of myself. We shall see. Let me go back to Kiwi CAD because you were talking about that crystal. Now, Kiwi CAD is very, very similar in that we've got a nice little channel here, an inverted head and shoulders, left shoulder, head, right shoulder, which hasn't come down to here, top of the range, the little range that we're in, which is this ascending channel. We've also got a descending channel, which is, I haven't got that drawn in, but the bottom of it's here and the top of it's here. And we've hit the top of that and we've hit that confluence area, which is the rising channel and the descending channel. Doesn't really look to be a massive horizontal level through there. So I'd probably rule that out as a confluence, but certainly the resistance trade line or trend line and the what do you call those things? Resistance trend line, top of the channel, which is this descending channel here. I'll put that in. So I'm not talking without making any sense. And I know I do that often. But there's the channel there. Hang on, I'll just change the ID of that if I can. There we go. We'll make it black. We'll make it like that. It's a little bit more important because it's the longer the stronger, as always. But you can see that confluence I'm talking about, and we have come off it. And that now gives me a bias to the short side. But what a mess. What an absolute mess we are in here. It's very difficult to think that I can find an entry with all of this traffic going on. And this is the problem that we have with Kiwi CAD. We're in this area that is bounded by top of range, top trend line coming this way, monthly pivots to the bottom side, we've got a support trend line. We've got the weekly pivot and the daily pivot. It's a terribly congested area and very, very difficult to say, okay, let's go. So I'm looking for something here. I'm not sure what it is, but as always, if I'm looking to trade short, it will be a break of resistance. If I'm looking to trade long, it will be a break of support and then back into that area. So whilst I'm very, very keen to trade this because it's at a great spot, it's also in in terms of a bigger picture, great spot back inside the range, lower low, lower high. You'd be thinking it's going this way. You really would. And it's just a matter of finding that entry. I'm dead set keen on it. If this bar, which is the weekly bar, were to be the daily bar tomorrow, and it could well be that we get up here and come back off it, then that gives me the hint that this is ready to go. But at the moment, I'm not getting that hint. And as I say, we're in a very, very congested area, so it's tough to call. That's Kiwi CAD. CAD Swiss, I haven't had a look at CAD Swiss for ages. And the reason I haven't had a look at CAD Swiss for ages is because I missed this short coming down here, and I'm looking for the long, as you know, but I can't see it. I just can't see it right now. I totally see the bigger picture, which is still the tweezer bottom, the higher low and the higher high, but we've just gone into no man's land here. And that's a little bit frustrating, I'd have to say. So I haven't really looked at it, Helen, to be honest, in the last little bit. If we get back above here as always and retest it, then I'll be looking to trade it long. But at the moment, I don't think I've got anything in there to offer. But also that said, I think these minor pairs are well worth having a look at. And that 4-hour chart is far more interesting than I gave it credit for. If we were to maybe close in this vicinity, then come back and retest that, this is the 4-hour chart I'm looking at, then there is a trade available for us. Let me just go a little bit wider on that. You can see that it would be coming off a nice little base here as well. It'd be a clear false break. Okay, you've got me interested, Helen. You've got me interested. So we've got, I think, 3 minutes left in this bar. Would that be right? I'd love to see it close a little bit higher, maybe on its high. Then we get a response from that, with the sellers giving us a decisive bar that closes maybe at that level there or that vicinity. That would interest me greatly. So keep your eye on that, guys. Up and back. CAD Swiss may well be a long opportunity for us. I've got to go and have a look at, was it Kiwi CAD I've got to have a look at? No. I've now forgotten. Not Aussie CAD. Aussie Kiwi. That was it. Okay. We've got 2 minutes to go in this candle. It will be an entry above this bar here with the TP1 here. I'll just give you an indication of what those levels will be, if you like, because we'll probably not be hanging around too much longer after that. The entry will be at 1.0667. I think I've said that before at some stage, 1.0667. And the stop loss will be at 1.0654. Let's write it down. 1.0667, 1.0654. So you've only got 13 pips of stop loss, and your profit will probably be around about the 6 pip mark, so half of that roughly. Yeah, something like that. What you do thereafter will be interesting, but because it's a 30-minute chart, what I will do is exactly the same as the pound trade, the pound breakout trade. I'll move my stops as soon as I take TP1 at, say, 6 pips. I'll move my stop 6 pips from entry and take half off the table. And I'll have to let it run because that's not going to be good enough for the reward side of things. Where will I let it run to is the question. Probably there. So that's going to be my level for take profit right there. 107.28. Okay. 107.28 will be the take profit on that. So with 1 minute to go, I think we can safely say that I will be taking that trade. So I'll set it up. There we go. To buy stop. Yeah, look, 0.5%. I don't think this, I'm on this small account here. I don't think it'll allow me to trade 0.5%. No, it won't. But I will be on my own account. So there you go. To buy stop, the level I gave you is 1.0667, I believe. And the stop loss was 1.0654, which is pretty much bang on where that is, 0.654. Okay. There's another one in the market. I'll just annotate that for you. It is Aussie Kiwi. Oh, gee, I'm a goose. Hate that when that happens. Aussie Kiwi. It is H1 charts. It's a buy at 1.0667. Stop loss 1.0654. TP1. There's a whole lot of conversations going on around me at the moment. I can hear them. I've got no idea what they're about. I'll have a look in the tick. TP1 was 1.0673, where you will take half off and move your stops 6 pips from entry. Leave the target open. I believe that's probably the wise thing to do. And I may even trail it. We'll see what price action's like at the time. Object name is empty. Oh my God. Sorry guys, that label didn't work. Dear. Aussie is coming down, maybe setting up for Aussie long. Yeah, but I don't want to trade against the dollar. Lewis, that's the thing. I do not want to trade it against the dollar. I don't want to trade anything against the dollar at the moment because of the situation. But yeah, I see what you're saying. Great line to trade off to. We'll see. Mate, the only ones that I really had interest in this week were the pairs that I've really gone through. Kiwi yen, I'm trading short on the weekly chart based on this false break, but pardon me, this is actually the chart that I was talking about before. I'm looking for entry here, stop loss here, target here. I'll leave a little bit on the table just in case it goes through. And there's your ultimate target right there. But then I'll be looking for longs, playing an inverted head and shoulders. That's Kiwi yen. So that's the order for the short. But I will take a lot off the table at that level, looking for that right shoulder and onward and upward. That's Kiwi yen. Euro yen was the other one. Let me get rid of that. Euro yen, and these are both on the weekly chart. Now, it's a little bit different, this one. What I'm seeing here is probably a little bit of imagination being used, I've got to say. But I can see a left shoulder, I can see a head, and I can see Quasimodo style right shoulder. And I see this bar here that I like. I've got to say I'd much prefer to see it over here. But it is where it is, and I can't change that. So I'm willing to take it short underneath that bar, stop loss above, as you can see. And I'll be playing, and this is very early, really early for me anyway, because when I'm trading reversal patterns, I like to see a neckline break and retest before I get in. But I do like that bar and in particular across that monthly pivot and all the pivots. So I think if we do get back to the bottom here, we will see a little bit of acceleration through that level. And the ultimate, of course, is to complete the symmetry, which would look something like, and maybe that's the right shoulder there. It would look something like that. So up, back, up, down. That's the idea on Euro Yen on the weekly chart. Outside of that, the Aussie pairs now are in sharp focus because I've got a bias along the Aussie, and now the Reserve Bank Deputy Governor has given me reason to seek those longs with gusto, and that's what I'm planning to do. So that's kind of me, mates. I think for the day, chasing those Aussie pairs long and those 2 weekly positions, I think I can sit back and relax on those for a while because they're not going to pan out anytime soon, one wouldn't think. Although I do see that Euro Yen is coming down pretty quickly. That may well trigger before the weekend. We'll see how we go.
Yeah. I think I'm of a similar opinion to you, mate. I think I'm pretty much done. It's the market has reacted pretty much as I think as before. It's very, very quiet and nothing's really going on. So I'll be waiting it out. Let's see what happens in the US session. Maybe we get some movement to the upside so we can get on a decent short, or we get a decent move to the downside so we can get our long eventually. But nothing to do just yet.
Shukri's got all the news, mate. He'll be all over it. So no problem.
Oh yeah, looking forward to Shukri session later. Fantastic. All right, guys. Well, join us in a little while in a few hours' time, where it will be Shukri and I will be in the US show, which is going to be we're looking at 4 hours, 9:30. I think that is Sing, isn't it? 9:30 Sing. I know everything's messed up, isn't it? Because of the US. The US is all different. I think the US is going to open up at. Is it going to open up at 9:30 Sing for the US?
Yes, that's right.
Okay. All right.
That's right. Now, I don't think you've got enough retracement to get into this, have you? And it's too early. So he's still looking for more retracement back here. All right, I'm done, mate.
All right, fantastic. All right, guys, have a good one. We'll see you later at 9:30. US is 9:30 Sing. Fantastic. All right, see you guys then.
Who's in charge here? Me. I've got to close this.
You're in charge, yeah.
Or Angel, are you going to close this? I don't know. 8:30. I am, okay. Oh. I don't think that's right, Angel. I think it's 9:30.
Let me see.
Because no, hang on. That'll be next week, Ash.
Next week.
It's still 8:30.
Okay, all right.
Because US don't change their clocks until next weekend. So it is 8:30 this week, and it'll be 9:30 next week.
Fantastic.
No wonder we get confused.
Done deal.
And we're easily confused. All right, we're out of here. Thanks, guys. Catch you later.